going to get started if that's all right with everyone. I know we have some more people joining us, but we have a group of people that are already online. So I want to make sure that I am cognizant of the time and that we respect everyone's time during this busy time of the year. I want to especially thank Cannabis Partners 360 for its partnership relationship with MCRAA and being able to provide this program today. And I also want to thank Gilbert Insurance Group and Danielle for being both a individual and corporate member of MCRAA and for helping us put on this program. I'm going to turn it over to Paul Solomon, who is our Cannabis Partners 360 partner, to introduce Danielle and give us a little bit more background. Paul?
Great, thank you, Matt. Thank you everyone for joining. Again, Paul Solomon here. Appreciate your time today and appreciate the opportunity to partner with each and every one of the members. We welcome your feedback. Really great to have Danielle and Gilbert Insurance, and Danielle has 18 years experience, really almost 7 years focused in the cannabis space, and we think this is a unique opportunity to help our membership. Our goal is really to be as responsive as we can. And in many cases, this is a very difficult market because of the banking laws. But Danielle today is going to lead us through the state of cannabis and insurance. So we appreciate your time and attention today and welcome your continued support and feedback. Danielle?
Thanks, Paul. Thank you, Matt, and welcome to the members that were able to join today. I appreciate you taking the time and the cost to join and learn a little bit about the state of cannabis and insurance. This is a really brief, very high level presentation about just what's going on and some of the things that we're seeing and some key coverage considerations for both plant touching entities and different things to think about if you're a prescribing physician. I wanted to build in as much time as possible if there's any questions so that we can have a deeper conversation. I do a lot of presentations about cannabis and insurance, and I found that there tends to be a lot of questions at the end where the people that are joining want to contribute and learn a little bit more. So please keep your questions ready, and I'm happy to answer any that I can. So as Paul said, I have been in the insurance industry for 18 years, and prior to tackling cannabis insurance 7 years ago, I have a strong background in construction, manufacturing, commercial real estate, nutraceuticals, and franchise operations. And the way that I look at this is that I've had influence on every single vertical that touches cannabis in one portion or the other. So I'm happy to have joined and be able to give you this important information. And we'll go through just a couple of brief items, as I said, with regards to cannabis. So the state of insurance today for cannabis, we do know that there is federal illegality. So because cannabis continues to be federally legal, the only way to access policies right now is through the excess and surplus market. What that means to the consumer is that there are not state filed rates. And usually when you have a main carrier like a Travelers Insurance or a Liberty Mutual, they have to file their rates to the state, which means the state gets to determine what's a good rate and what's a bad rate. And there's rules of engagement that have to follow with that. Because of the federal illegality, that means that the excess and surplus market can kind of make their rates whatever they want, and the cannabis entities are beholden to that. Until there is either federal legality or the Banking Protection Act through the MORE Act, there may not be an avenue for insurance carriers to comfortably enter the insurance market and feel protected if anything were to happen from a claims perspective or a banking perspective. The other biggest thing that I'm seeing in the insurance industry right now as it relates to cannabis are current state legislations. The biggest one primarily is with regards to the state of Michigan. January 1st, the state of Michigan passed a law saying that the insurance carriers had to be admitted And this is what I was going back to with the federal illegality. So basically, the states have to be admitted with the state and file all of their forms and their rates with the state. So that made it a little bit hard. The other requirement for cannabis touching entities was that the first $100,000 of any claim had to be virtually exclusion free. So basically, there was no way for the insurance carrier to say, if you do something wrong, we're not going to pay that claim. It had to be basically free insurance. What that caused was a restriction in market space. As you may be aware, there is already a restriction in the market space where we only have maybe a handful of carriers who are willing to write coverage in this space. Because of what the state of Michigan did, is it further restricted the ability to access insurance. And what that means is that kind of gave a lot of power to the insurance carriers to kind of do whatever that they wanted to do because there was nobody else there to compete with. So as we move forward, it's really important that as an industry, we pay attention to the types of laws that are being passed in the state to see how that might affect us from being able to access and purchase fair pricing insurance. This is something that we're monitoring ongoing. I am involved with several individuals that speak on national panels to governors, and this was one of the things that when I was asked, what should we bring up? This was a specific one of, I understand the intent and it's a good intent, but we have to be cognizant of how that affects market space and the negative drawbacks that go with that. So this is an ever evolving situation in the insurance market space for cannabis. It changes almost daily. We have carriers who will jump in, we have carriers who will jump out, and we have more restrictions being placed on the policies. The one thing I will say, as you are working with an insurance agent to cover your liability, it's important to work with a cannabis specialist who not only understands the cannabis entities and the cannabis industry, but also understands how that works as it relates to insurance. And kind of the way that we'll go through this is talking about every vertical on the cannabis space and some key considerations that need to be considered. So the first one that we'll talk about is dispensaries. The key coverage issues or the key coverages that would need to be addressed is products recall, products liability, and theft. If you're paying attention to anything about the cannabis industry, you would have seen that there have been several articles and several recalls in various states, my home state of Arizona being one of them. Part of that is because after what we're finding, testing being certified as being safe, the state's coming in and finding out that there may have been some miscommunication or mistesting. And that means that product that should have been eliminated before it hit shelves actually hit shelves. One of the things that was tested that was noted as being not present on the plants that actually was salmonella. As you're aware, you see salmonella product recalls all the time on everything from spinach to raspberries and different things. We have the same situation when it comes to cannabis. And salmonella is just typically a product of unhealthy housekeeping. So these are things that are very important. You can access limited coverage for product recall on your insurance policy, and knowing what those limits are and the limitations and the rules that you need to engage in to have the coverage is very important. Theft is a very big exposure because, as you know, cannabis is a cash business. So they're either going after your cash or they're going after the cannabis to be able to sell that on the black market for more cash. One of the things that's very important is to keep an eye out for limitations on your policy. Those can include warranty and safeguard endorsements. I was actually on a clubhouse yesterday where I was talking with claims adjusters and attorneys in the cannabis space, specifically about warranty and safeguard endorsements. These are on every single policy. And what that basically says is that if you have a property loss, you have to have a central security station alarm. You have to have burglary. You have to have video surveillance or whatever it is that you represented on your application as you're trying to get quotes needs to be in place. And if there is an interruption in that service, the carrier may deny the claim. As you may be aware, there have been several theft cases in the state of Washington recently with regards to theft. And so that is a big prevalent problem that we're trying to address. So it's important to understand and work with another insurance agent who understands what these safeguard endorsements mean and how they could affect you at a loss time before the loss occurs. What we never want to happen is to have to learn that lesson after we've received a declination of coverage. The other important limitation that needs to be taken care of is the health hazard exclusion. There is one on every single policy, and the language for that varies from something very, very broad to something that makes sense. So some of the things that you might see on a health hazard exclusion is cancer, carcinoma, heart problems. We get that. That might be a situation. We see the same thing on tobacco products. So it's something that we know is happening. The problems that we want to make sure that we're looking out for is anything that we might actually see a claim come from right now, which is anything mentally health related or panic attacks or anything that might be in that category. These are claims that we're seeing right now. Curaleaf had a similar claim a couple of months ago where they made a mistake and added THC tincture to bottles that said that they were CBD. Now, in order to sell CBD, the THC level federally has to be lower than 0.3%. That was not the case with this one. So what happened is there was 7 claimants who purchased what they thought was CBD and took the tincture. The tincture actually had high levels of THC, and they experienced mental issues, I'll say, that made them feel weird, made them feel funny. They went to the emergency room because they were scared and because they were feeling something that they did not know that they were going to feel, obviously. So depending on what the health hazard exclusion has on that policy, the policy will either respond or deny coverage. The important thing in that too is that if there is no duty to defend because of the exclusion, you may have to pay your attorney out of pocket rather than enjoying the coverage that you've paid for to help pay for those attorney fees. The other thing that's important is specified products exclusion. So if you're selling a product that has ashwagandha in it or has Delta-8 in it, there may be a specific exclusion on your policy that says we're not going to cover you if you have those types of ingredients. This is important for every vertical except for cultivation. So if you're a dispensary and you're selling these items, you may not have coverage. If you're a manufacturer and you have those items in there, you may not have coverage. So that's one of the specific exclusions that I point out with my clients when I'm addressing their concerns and presenting an offer. The one biggest thing that's important for dispensaries is to explore risk transfer possibilities. These are things that you can control outside of insurance. So what are your suppliers giving you in the form of a certificate of insurance? Do you have a contract? And does that contract have an indemnification portion? And how is that addressed? That's something that every business vertical outside of cannabis uses. We all use contracts when we're engaging in purchasing product from one another. And that's important to insulate your company from having claims or having to pay claims if that's not something that you created. The best way that I can explain this is Walmart and Target and Costco. You don't get on the shelves unless you comply with their contractual requirements and their insurance requirements. If you can't do that, you don't get to sell your product on their shelves. It should be the same way for dispensaries. The next item that we'll talk about are manufacturers. This is the next level in the supply chain. So the manufacturers obviously are the ones that are manufacturing the tincture, the shatter, the butter, the gummies for eventual sale at the dispensary. So their key coverage considerations, and this is not exhaustive, it's just a sampling, is again, products liability, product recall, theft, fire, explosion, and pollution liability. These are additional because of the type of extraction that can take place in a manufacturing facility. We have a lot of closed loop systems that are using chemicals that could result in an explosion. You should have a boom room where if you're doing that extraction. A lot of the things that I'm seeing in the industry now is that we're transitioning to maybe a little bit more bubble hash extraction, which is less scary and volatile than other things. Pollution liability is something that's not technically covered under a regular insurance policy. You would have to go purchase an additional policy. And that's important because if there ever is a spill, or there is an explosion, or there is smell that's emanating that maybe your neighbor businesses don't appreciate, they can come after you with a claim, and that's where you would find the defense and coverage to assist you in those situations. Again, the limitations and exclusions are the same that we just talked about for the dispensary. These are the same that we see in all policies, and these are things that you need to think about. For the manufacturers, the consideration outside of insurance is, what does your indemnification agreement say with the people that you are doing business with? The indemnification agreement is basically the rules of engagement of what happens if the dispensary is pulled into a claim. The indemnification basically puts the burden of the liability on the manufacturer or the cultivation, saying that regardless of whether there's insurance or not, they will indemnify and hold harmless the dispensary. So if they create a product that's bad and the dispensary gets pulled in, the dispensary can seek coverage from the manufacturer, whether through insurance or on their own. The important thing to remember, specifically for cannabis, is that if there is a judgment assessed or there is a lawsuit and it's deemed that you are responsible for paying that, there is no coverage that's given for bankruptcy, which means that if there's a judgment against you, you have to pay it and there's no way to try to get out of it. So it's important to think about that in the background as you're entering these contracts and making sure that your insurance policy will cover you as best as possible so that you're not having to pay out of pocket. Finally, the last vertical I wanted to talk about was cultivators. So this is where it starts for the entire industry. This is where we have the seeds. This is where we get all of our product. So again, as you'll see, it's the same key coverage issues. The one that's added is equipment breakdown. So what happens if you have a surge of electricity and you can't get your generators to work, or you don't have generators, or something happens and your lights aren't working? As we know, these plants are very sensitive. Anything can happen to them. So we want to make sure that we have some kind of equipment background or equipment breakdown coverage, and we know what those limitations might be. There may be some limitations on the policy that says if you don't go try to start it again, they may deny coverage. So it's important to talk about that with your insurance agent and understanding, okay, if A happens, what do I need to do? And implement that into your standard operating procedures so that everybody knows how to react in the event that something happens, so that the coverage that you're paying for is actually given to you. Again, the same kind of limitations and exclusions need to be taken care of as we've gone through with manufacturers and dispensaries. The biggest thing for cultivators is, who is testing your product? Do you know what their background is? What are their records like? Have they had any problems with the state before? Have they had any complaints against them? And do they have an errors and omissions policy? Because as we've talked about, the products recall that's occurred has been from a testing facility that has warranted that these products are safe. Had there not been an issue, then there wouldn't be a problem. But because the problem started from the testing facility, you might be able to seek coverage under their professional liability policy for your loss of income. So it's important to start talking about that and level ourselves up a little bit as an industry to work the same way that any other industry would in making sure that there's adequate risk transfer. The last portion is directors and officers liability. This is what I call the bane of every cannabis entity's existence. I think Matt can speak to this. We worked a little bit on the D&O for the association. And the biggest thing that I hear across the board is, this is so expensive. The entrance fee basically for a plant touching entity is closer to $100,000 for $1 million of coverage. So you're basically paying 10% of your claim at that point. It is very cost burdensome, and there's not a whole lot of coverage in some situations. It's important to, again, work with a cannabis specialist that understands what the coverages need to be to make sure that you have coverage identified. I can remember 5 or 6 years ago that there was a D&O product that was being sold that basically had no coverage. But the coverage was being purchased so that they could attract more board members. The problem is that none of the board members actually had coverage. So what I wanted to show is just a little bit about why coverage is so hard to find and why it's not affordable. These are things that are beyond our control at this point. It's the way that the market works. It's also what we're seeing across the board in the cannabis industry. The cannabis industry is very litigious. I know that there are lots of claims with regards to copyright infringement. Some brands are using, like Skittles, for example, the same kind of packaging from Skittles. This could breach and go to a directors and officers liability claim, because the directors and officers have a fiduciary responsibility to make sure that there's nothing happening in that organization that would lead to a lawsuit. So it's important to make sure that there are appropriate standards and controls to go into that. And what that should ultimately do, especially for a plant touching entity, is be translated over to the carrier so that they can see and assess that there aren't these risks out there that they don't know about, that they might have to pay for a claim. Anything that is a non-plant touching entity that has to do with cannabis, or as we found out, that has cannabis in the name, has a high starting point, even if you're a nonprofit organization. It's in the couple $1,000 range. So that's something to consider as you're coming forward if you're a nonprofit organization. Unfortunately, like I said in the beginning, because of the federal illegality of cannabis, even having the name in it puts you in a silo in the insurance carrier's perspective, where they're going to price you. The way I explain it to a lot of my clients is, you can go buy a dozen red roses on February 1st and pay a little bit less. But if you go buy a dozen roses on February 14th, you're going to pay a 30% surcharge. And that's just because they can. It's the same thing with insurance. It's unfortunate, but that's just where we are right now. I'm sure that maybe some of you might have experienced having cannabis in your name, and you're not able to transact business on Venmo or PayPal or any of the main cash transaction bases. And that's just because as a country, we're just not there yet. Hopefully there's improvement on that. I know Matt sent out a couple of emails over the past week about medical cannabis research, and hopefully the House and the Senate can get together and play well in the sandbox and put something forward. And then at that point, hopefully our president will keep to his promises and say that he's going to push through a cannabis agenda. All of that is unknown at this point, but I think as an industry, it's important that we voice our joined efforts in making sure that these things do pass, because the less stringent it is, the better it is for everyone. The last thing I wanted to talk about was cannabis prescribing physicians, and this is specifically with regards to medical malpractice. As I've said through this whole presentation, it is extremely important that you work with somebody who is a cannabis specialist. Cannabis is not a one-size-fits-all type of product that is sold, because the cannabis space is so different and so unique because of state laws, because of the federal illegality, because of 280E, and even in a situation as prescribing medicine, there are specific ramifications that can happen in a policy that a non-cannabis specialist will not catch. So one of the things that I was talking about earlier was, where are the claims coming from? We need to understand as an industry or as a prescriber what kind of claims are out there. I just alluded to the Curaleaf claim. Again, that was a situation where there was a mistake that was done. But the claim that came about, there was a wrongful death claim. And there were several claims of some kind of psychosis that happened because they weren't able to control themselves because they had ingested an inordinate amount of medicine that they did not expect. That could happen too, and that could come to a prescribing physician because the impetus might be given that had my doctor not prescribed to me, I would have never taken the medicine. So that goes to the next point. What is in the policy language? You need to make sure that the policy language will cover anything that the claims are coming from. Again, if you're not working with a cannabis specialist, they may not understand what the nuances are in where those claims are coming from. And then, are there exclusions to coverage? Unfortunately, there are. I have worked on a couple of policies with regards to medical malpractice for providers for cannabis that have specific exclusions in there that were very scary, that would leave the physician with no coverage and no duty to defend. At that point, it was basically, why are you even paying for the coverage? Because it's not going to give you what you think. Again, coverage was placed by a non-cannabis specialist. I came in there and alluded to the situation, and we're working through that situation. It would be an uphill battle if that policy was kept, to try and assert coverage. But the last thing that you want to get into when it comes to medical malpractice is having to sue your insurance carrier to provide the coverage that you're paying for. So again, a lot of this could have been explained up front or avoided potentially had that person been working with a cannabis specialist. So it's important to make sure that you are reviewing your policies, you're asking adequate questions. As an agent, I am paid because I'm placing policies, and it's my position and it's my responsibility to make sure that I'm addressing all those things. As agents, I would hope that we welcome the hard questions and that we walk you through your concerns, because ultimately this is your business that you're creating, and it's our job to help you insulate yourself so that you can keep that, and that we are helping you with your concerns. So again, if you are a prescribing physician and you have a medical malpractice policy, let's go through it and make sure that there aren't exclusions that are going to leave you out there. Again, I'm a person that is very much, let's learn before we have to learn after. This is an emerging situation. We're working through it. I have contacted a couple of different carriers to work on a couple of different strategies. It's not as just simple as placing a policy, but it's something that is being brought to the forefront, and I'm doing a lot of work behind the scenes right now to do a lot of education on making sure that physicians truly understand what their medical malpractice policy is giving them. And with that, I wanted to open it up to a little bit of questions and answers. I know this was really high level. I'm happy to go into more information on anything that's discussed. You can call me or email me, and we can set up a Zoom call or a phone call. And I'm happy to get into any questions that you might have.